CNG Media.
Welcome to Vino with Vito, Dave Taramina, and backed by popular demand, Chris Bujowski.
Oh, my
Wow.
God. He butchered that one.
Did I butcher it?
Bujanowski.
Bujanowski. Okay. CNG Media.
Yes.
CEO of CNG
CEO,
Media.
yeah.
And I like to call him the man behind the curtain.
The wizard. The wizard.
The wizard.
We
The
got
wizard's
we
in
got
front
the
of the
wizard.
camera
We
now.
got the wizard back. And look, today, if you noticed, the wizard bought a bottle of wine with our Robert Graham holder. Look at this bottle of wine. You know it's a good bottle of wine, right? When it doesn't have a label in the front,
Nice.
right? Only in the
What
back.
kind of wine?
I don't know. You bought it. You tell me.
It says it right there.
All the way from Italy.
It's all the way from Italy. Salvano Wines. Actually, Kevin and Samantha again from Salvano Wines here. It's a nice bottle of wine. It's called Diano di Alba.
Nice.
Oh.
Nice, right?
Not
Make it
too
nice.
shabby.
You
We're
make it
gonna
nice.
make it nice.
Make
But
it
Chris
nice.
is not
Make it
drinking
nice. I'm not
today. It's
drinking.
only me and you, Dave.
I'm
so
not drinking either.
Come on, somebody you got to drink a
Drink
little
by yourself,
bit.
bro. Just like every other day in
Like
your
every
life.
other day in my life, right? Just drink. So Dave's gonna have a little bit. Chris has an excuse where he can't drink, so we're
A
not.
lot of
gonna-
traveling. Put on too much weight.
We're not.
Oh,
Gonna
that's the excuse. Too much
That is
weight.
the excuse.
too much weight.
Weak.
So I was in Rome. The amount of pasta we ate for 8 straight days.
When were you there? When were you in Italy?
I got back last Tuesday.
Oh, nice.
Yeah,
Was it hot?
Hot as
Oh.
you could imagine. 104 in the
Yeah.
afternoon. But I enjoyed it, though. It's Italy.
Guess
No air
what?
conditioning.
We might not be drinking.
There's
I
AC, but
can't
they don't
open
do it
this.
like how we
No,
do AC.
no.
They have one split unit that does like 4,000 square feet. It's
Yeah.
crazy.
You just have to sit like this and not move.
God.
V, you
fun.
need help, buddy?
Uh-oh.
Oh.
Oh, that cork smells.
Hey, Vito, you
good.
have ice back there?
Cork smells good. Yeah, I got it in my pocket. Dave, what do you think of the Robert Graham shirt today? Look, it's nice, just stripes. It doesn't really
It's one of your
stand
better.
out that much because I know how much you don't like, those
Loud
wild,
shirts.
loud shirts. But I love the loud shirts. But today I figured, you know what? Be nice and calm, a little
toned
bit.
down. Toned down.
Toned down shirt.
I like it. I actually like it today.
Speak of Robert Graham shirts.
Oh, yeah. Big news,
you
man.
got some
big,
news
big
for us.
news, yeah. So I get an email from Robert Graham Collectors, and they're coming out with a new line in spring of 2025. New
Okay.
limited edition shirts, and I got to name one of them. I'm not going to give you guys the name,
It's
but
his own shirt.
Yeah.
my own
Wow,
shirt.
this is
you know,
huge.
limited edition. They're only going to make a certain amount of them, and one of them is going to be named by one and only.
Really?
Vino with Vito.
Wow. You can't share the name yet?
I don't want to share the name.
It's
yet.
coming out
It's
spring
coming-
2025.
Spring 2025.
This
Yeah.
is like a high water mark in your life, man.
Oh, absolutely. Absolutely.
Big time. Big star.
Big time.
The big star.
Big star. You know what? He's going to be a big star.
One day you're going to be a big star.
That's big, though.
That is big, V.
I
You
think
know-
you're the first realtor to name a Robert Graham shirt in the country.
Huh?
Yeah, you
Look
make-
at that. Dave, I'm only giving you a little bit because it's really good wine. So since Chris can't drink,
It's bad
salud.
luck not to drink, by the way.
I know. Yeah,
All
little,
right,
just a little bit.
Just a little
Just
bit.
to try it.
See how
Right, perfect. Good
Well, we know where his willpower is. So.
Oh, salud.
So, congratulations, Vito.
Thank you.
Yeah.
Thank you.
Time.
Oh, it's nice.
It's fruity.
Yeah.
That's a nice.
That's a nice.
That's a nice wine, huh? Nice wine.
Just want to make sure I don't get the glass in the shot.
No,
there
no,
we go.
don't get it in there. But today we're thinking of a guest that's actually an attorney that was going to come on. He ended up couldn't come on today, so he's going to hopefully the next one he'll be on.
Sure.
But still wanted to do a podcast, Dave. I wanted to talk about the Fed today. What's going on with the Fed since you got an MBA or MBA?
I should have never
or
told you guys
CBA,
that.
No, he's
what-
in the NBA.
He's
I'm
in the
NBA.
He's in the NBA.
We were watching that. We were watching it last night, my wife and I, and we even both just laughed when we started. Like NBA? No, not too short. Too short. That was good.
But we're gonna talk a little bit about the Fed, what's going on, what my take is on it, what your take is on it, and what the
And the
Wizards,
Wizard.
the Wizards
Wow.
take on there. And I've gotten a lot of people asking me about the new regulations with the NAR2, with buyer's agreements and all that. So we'll talk a little bit about that.
Okay.
What do you think, Dave, with what's going on with the Fed and with the rates? I know the market was really hammered last week. And then a little bit this week, it's starting to come back.
Yep.
And it's just crazy because people just keep, calling, hey, the rates dropped. You see that? They went down a half a point, whatever.
Yeah.
And then the day later, they're right
back
back at the same thing.
Yeah.
Can you explain to the people out there why that's happening and why do you think it's happening?
Well, it's pretty simple. So last week we had a jobs report, right, that showed unemployment ticked up a little bit, right, to 4.3%, I believe, and simultaneously, without boring everyone, there was basically there was a correlation between Japan's economy and their central bank and ours, where certain mechanics of it spooked the markets a little bit, kind of like what we were talking about the last podcast, where there was a little bit of flight to safety, right? So those two things happened simultaneously last Thursday and Friday, right? And we're filming today. It's August 9th.
Right.
So
following Friday.
Right. So rates dropped about half a point. That was on Friday. Monday morning, rates were still pretty low, and then they just kind of went right back up to where they were last week. So basically went down half a point, up half a point. So it was knee jerk. We had some clients who were able to lock in on that day, or maybe some clients who were in process, who locked at this rate. We were able to renegotiate them down. So some people took advantage of it. It was a real quick window. But now you're starting to get the speculation, and you're hearing it on like on CNBC and Bloomberg, that the Fed there's emergency meeting. Fed's going to do emergency rate cut,
right?
And this and that. 1 point they're going to do 1 point rate cut, and just shows the hysteria in the market. So that's kind of in a nutshell. I hope I answered the question. That's kind of like what has been happening.
But for a buyer, though, that's out there, do they contact you saying, let's lock in the rate? Or as a broker, you're contacting your clients?
I'm contacting them.
You're going after them?
So, I definitely, all day, Monday and Tuesday, all I was doing was just lowering rates for clients in process, letting my clients who were pre-approved, right, and shopping for a mortgage, let them know, like, hey, like, if you have an offer out and that offer is accepted, you have a 48-hour window to lock, right? And that's where experience comes in, right?
Sure.
Like, I could look at the market and I could tell you right away, like, where the bonds are going, what's happening, which direction. So that comes with experience. But so overall, I think it's a glimpse, like, for those in the mortgage business, those buying a house, those who own a home. It's a glimpse of what we're going to see more towards the fall, and then probably the beginning of next year.
Now, for instance, say somebody had a rate, right? And again, I know we can't talk numbers or whatever. I'm just shooting numbers out there. Their rate was 7%.
Yep.
And all of a sudden, Friday, the rate goes down to 6.5%. Meanwhile, they were already locked in a 7% interest rate. They're not closing for another 3 weeks.
Yep.
Were you able to help them
Yes.
out and bring them down to 6.5%?
Yes. In those scenarios, at half a point. That's what we did basically. So yes, so there were some people in process who were buying a home, closing in the next 60 days, who were locked at a certain rate and benefited from that quick rate drop.
How long was that lock process for?
So it depends. Like, average buyer usually locks for like 30, 45, or 60 days on average. There's different times that you lock more or less, but yeah. So I mean, It was great. Like, there's some clients who are very happy, like, that they're cutting,
Saving money.
half a point off of, an $800,000 mortgage is big. So
Now,
in that term, I'm sorry to cut you off. That term,
No, go ahead.
It's called a renegotiation. Okay, so or float down. Float down's another one that we use. So some lenders, all lenders offer it. However, some are much better at it than others. Some have bigger requirements to renegotiate, right? Like, the market would have to move much more for them to lower your rate. Where at Guaranteed Rate, we have a very liberal process where it's very easy to renegotiate. Probably the easiest I've seen in 25 years. So, but yeah, so anybody out there, if you're when you start seeing the rates drop, it's called a float down or a renegotiation, something you want to talk to your lender about.
So now you were saying a lock in 30 days, 45, 60 days. How about 90 days? Is it more money to lock in for 90 days? Because we're having a lot of issues, like, for instance, you go and you say, okay, we're going to close in 60 days. Now you as a mortgage guy locks them in for 60 days. Now you can't close in 60 days. It's going to be, 75, 80 days to close. Now their rate lock expired. What happens in a situation like that? Why wouldn't you have just locked them in the 90 days? Is it because the rate is higher or it's more money to do it in 90 days? Can you explain a little bit of that?
Yep. So rule of thumb is longer the rate lock, the rate tends to be a little bit higher, right? So if you lock somebody for 90 days or 120 days, the rate's going to be a little bit higher than someone who's locking their rate for 30 or 45 days.
It makes sense.
Yeah, it's more of a hedge for the bank, right? Bank's holding that rate for you. Okay, whenever a bank locks your loan, right? They're making a promise to their investors, to Wall Street, to Fannie and Freddie, that okay, we got this loan at 6.5%. We are going to deliver it to you at 6.5% in a certain time period. So they're already hedging. It's like kind of like borrowing money, right? At a certain level. So the longer you're holding your money out there, like 120, 180 days, right? More things could happen in the market. So it's more of a risk for the lender.
Sure.
Right? So if rates go up during that time period, okay, you lock at 6.5%, rates go to 7.5%, right? So you lock here, market goes here in 90 days. The customer's winning, but the bank has to hedge because they're gonna lose money, right? Velocity of money, right? So that's the rationale behind it. The time period is also a big misconception. Is like, okay, I lock for 30 days or 45 days. It's how long it takes the bank to process that loan. It's actually the time period is actually the amount of time that the bank or lender promises to deliver that loan after they close to their investor, typically Fannie or Freddie or whoever, FHA, HUD. So you lock for 45 days. They have 45 days after they close to basically sell that loan off. So I know we're getting like really deep into the weeds on this, but
It's interesting though.
Yeah.
No, it's real interesting. I'm glad we have you on the show today, Dave.
MBA.
MBA.
MBA Dave.
MBA Dave. Rutgers Dave. My daughter went to Rutgers.
I didn't go to Rutgers.
I know.
I
you
went to
didn't go
Montclair.
I figured that.
Montclair and then Centenary. I got my MBA from
Oh,
Centenary
I thought
in
it was,
Hackettstown.
School of Hard Knocks. You got your MBA.
Yeah,
No,
listen.
it wasn't that. Now, what happens if now your rate is about to expire, your lock is about to expire? Can you extend that lock? And what would it?
A number of things happen, right? So if the lock expires, right, you could do a number of things. Depending, and every situation is different, right? Depends on how much time you need. If you need like 1 day or 2 days, depending on the situation, typically the buyer will pay it. It's very small, or the lender could give you a credit, whatever the case is. If you need more time, like let's say you're closing, Monday and your lock expires Monday, but you need another like month and a half, just foundation issues, whatever, on the home.
I got one of those right now, but go ahead.
So depending on the market, a number of things happen, right? If let's just keep using 6.5% for the purposes of this conversation, then you're locked here and the rates are so much higher now, right? What's that buyer going to do? They know they're going to buy it, but they need 30 days. They're going to probably pay for the extension.
And
right?
what's the cost of a normal?
It's usually
extension?
about 2 basis points per day. So now you're going to make me do math. Hold on.
Yeah, go ahead. You got your MBA. You should know that in your head.
Yeah, I'm not that. That's why there's calculators.
See,
So
The worst thing he did was telling us he's an MBA.
Oh my God.
So typically, like, if it's a $600,000 loan, it's probably like $100 a day.
$100 a day.
Yeah, but the alternative is you let the lock expire and then pay the higher rate. You're going to pay more in the long
Okay,
run.
but now what happens if
rates dropped?
The opposite.
Or the same, or
No, the
dropped.
opposite, where they dropped.
Well, so then it depends, right? And again, there's so many different scenarios, so I'm just giving vague answers, but typically what would happen is
You notice they're all vague all the time
Well,
with
that's-
the
he's
disclosure on
saving
the
his
bottom.
ass.
I'm vague. Go
Dude,
ahead.
because I could be here for 20 years talking about this
No,
stuff.
no.
Because
If the rates did drop.
if rates
right.
dropped, it depends on how much. If it's like 6.4, then we have to have a conversation with the client because you could let it expire, and then if you relock the next day, you do get another 30 days, but there's also cost in that as well, and it's like usually
so
a
you
quarter
could-
percent. Yeah.
So you can let it expire.
Yep.
And then relock.
Correct.
So, for instance, I got a mortgage rate of 7%.
Yep.
Right? Mm-hmm. I'm borrowing 800 grand. Mm-hmm. All right. My mortgage rate's 7%. My rate's going to expire today. Today, the interest rate's 6.5. So I let it expire. And now I can
The
come
next
to
day,
you and
you
say,
relock.
hey, Dave, on Monday, I want to relock at 6.5. Now you're going to give me another 30 days?
Yes, at a cost.
And what's the cost?
It varies.
Like, give us an example. We're not going to hold
Say
you to
like
it.
I don't know, maybe a quarter to half a point
Of the loan.
of the loan size.
So if it's 800 grand, quarter
grand.
point,
Yeah.
half a point's 4 grand, quarter point would be, 2 grand or whatever.
Right.
But over the long run, that's
safe.
2 grand, you're safe.
Right.
Because the other way, now, if you had to keep that other rate locked for another 30 days, it's probably going to cost you 2-3 grand to relock it anyway.
Right. And now in that scenario as well, so you have somebody who's has an issue that could be long term, more than 30 days, you could actually let that lock expire. And if you just let it sit there, and then if 30 days concludes, so basically you have to wait 30 days. So if you relock after 30 days, you don't have to pay that fee. If you relock within the 30 days that's expired, you have to pay the fee.
Pay the fee. Now, why do all mortgage reps and banks and everybody say, hey, don't just redo another mortgage and let that one go?
What do you mean?
Like instead of like here, the rate locked expired or whatever. Well, I'm gonna reapply and do a new mortgage because now the rate's less money. It's better off doing what you just said.
Oh,
Let
like
it
why don't they just say let's just cancel this deal and
cancel
reapply?
this deal and reapply?
Two reasons for it. One is exactly what I just said with the bank promising, having their money on the line. Remember, banks just lend, so it's not like the old days, like in It's a Wonderful Life, right? With George, what was his name?
George Burns, no,
George Bailey. So where people come in like I want my money from the bank, right? And the bank has this big safe. It doesn't work that way anymore, right? So banks get their money through liquidity, right? So it's basically just switching hands,
Deposits.
right? Yeah, well, it's deposits, but it's also Fannie and Freddie. So what happens is they'll give the loan for $800,000, right? They'll get a fee. The bank will get a fee from it. They'll turn around and sell it to Fannie. They'll take that fee, turn around and lend again. It keeps it liquid. So when you lock a loan at 6.5 at this address, that's registered where the bank is saying, I'm going to deliver that $800,000 loan at 6.5 on this address. Okay. So their investors are waiting for that money. And the investors, typically Fannie and Freddie or HUD. Now, if you cancel that deal, okay, and try to reboard it the next day with the same address, the agencies
Pick up on it.
they pick up on it. Number one. Number two, for compliance purposes, you can't do that either. It's like it's almost there's some regulatory reason why you can't do it. So there has to be a valid reason. So you have to find a valid reason to do that, right? Like maybe they don't qualify.
I'm sure we can find a valid
Yeah, like I'm
reason.
sure like investment properties, there's different
Right, then
Different
all-
things like okay, they don't qualify for this, but now we have to switch to
to
this.
this mortgage,
and,
right. And for everybody out there, Fannie and Freddie and
I was just about to bring that up.
that Dave is always talking about, it's Fannie Mae and Freddie Mac.
Yeah.
So Dave, what is that? Like for people listening that don't know.
Yeah. So they're a married couple, Fannie Mae and Freddie Mac. So they've been around so long that Vito sold their house to them.
And Uncle Sam is there's an uncle to
is-
Fannie and Freddie, right?
Yeah, so Uncle Sam is HUD. So So, and again, we're probably going to drop off about half the viewers on this. But if you really are into
All my viewers are smart, by the way.
well,
so
perfect.
they're not
Well, half of
jumping.
them speak Italian and Monte Scolioso, so they're not going to know what I'm saying anyway. But so Fannie and Freddie are quasi government agencies. They used to be. They're almost like the Port Authority. Like they're public, but
That's
they're
a good way of
private.
putting it.
Yeah. So basically, like before, so it started. Fannie and Freddie and HUD were created. Fannie and HUD were created by Franklin Roosevelt during the Depression. So going back to that original example, like George Bailey. So the best way to understand the mortgage market is if you look at that movie, right? So what happened was there was a depression, right? And everybody ran to the bank and was like, I want my money.
And there's no money.
And there's no money. And George Bailey has a famous line there. He's like, I don't have the money back there. The money I lent you is in his home and
That's
his
right.
business, right?
Yep.
But people were scared and there was a run on the bank.
FDIC.
Well, it was before FDIC.
Yeah,
So
that's
FDIC
what came later, yeah.
Exactly. So before that, right? Like mortgages were not for 30 years. It was
Shorter.
It was like 3 years, 5 years, had to get redone. And if the bank ran out of that capital to lend, right, nobody was getting a mortgage. So you want to come to me, buy a house, buy a farm, right? And I'm Dave Taramina Bank, and this is like in the 1920s and prior, and I don't pull in enough money, I can't lend to you.
Yeah.
So buying a house was really hard, and the down payment requirements were crazy. Like you have to put half down, right? So anyway, that coupled with the run in the bank, they came up with Fannie Mae. Fannie Mae is basically it's like almost like an insurance. They buy these loans, they securitize it. So same concept, like my money's here, my money's here, my money's here.
Yeah.
But what's happening is if you look in like your 401k and your pension funds or whatever, Fannie Mae takes these mortgages, okay, so from millions of lenders. They take these mortgages, they ensure that they meet a certain amount of quality, right? Then they slice it up and they sell it to Wall Street. They sell it to investors, to foreign governments, to bondholders, to whoever, to your investment accounts, your 401ks, whatever, right? To banks, to other banks, other institutions, whatever. So the reason that banks will do that is it creates that liquidity because Fannie will buy that loan, okay? And the customer doesn't see this. Customer still makes their mortgage payments to, ABC Bank and the whole thing, but they will take that money, right? Or that loan. It'll get sold to Wall Street. They'll give a fee to the lender who turn around and lend that money again. And it keeps the mortgage market
Going.
liquid.
Yeah.
Now, what's great about the securitization is investors aren't dumb. They're like, this is a safe bet. This is an American homeowner, right? So we want to make, more money on it. So instead of a 5-year loan, why don't we stretch this money out and get a
30
nice
years,
return over
yeah.
15, 20, 30?
You think we'll ever see like a 60-year, 50-year?
We have 40-year now.
I was going to say, do you think we'll ever see it go higher than 40?
I've asked this question to a bunch of executives like that have been
Probably,
in the industry.
right?
They say no. I don't think a 60. It's too long because remember, people want to get their money back, and unless we start living to 120.
But would you see more people adopt, like if you're going to buy a property, adopt that loan that's already on the property?
Like an assumption.
Yeah.
So that's a whole thing with affordable housing where I was just reading an article that one of the ways we could fix affordable housing in this country
Is that
assume the mortgage, right? I'm selling a house, I have a 2% rate. Like I'll sell my house to you, you assume my mortgage,
That
right?
works.
It works. The problem is, this is where it goes back, and this is why it's so interesting, is, okay, like, but the problem is, though, is that I'm a bondholder now. I bought your mortgage from Fannie,
Sure.
okay, with your credit profile, right? Now, I'm not comfortable if you take that credit profile and give it to somebody else.
But why not screen that buyer the same as them getting a loan?
Because it's already been secured. It's already been sold. That one mortgage could be sliced up in 8 pieces and sold to a bunch of different people, to insurance funds, to life insurance funds. Or you can't. It would be impossible. It would be a nightmare.
Wow, you guys lost me at loan.
I think there definitely could be a way with new technology to figure out a way where they
I agree.
all.
You could do it with a going forward.
Yeah.
Like
Blockchain.
make the bond that you're selling, the mortgage, make it assumable right off the bat, so that if I'm an investor and I buy that bond, I understand that it may get assigned to somebody
You
else.
see with investment properties, multifamily, they do that
Yeah.
a lot.
A lot.
Yeah.
Maybe you should talk to Fannie and Freddie. You know them. They're a couple.
We should invite them on the podcast.
Yeah.
Well, you
we
sold
should.
your house.
Oh, I know, right? I
But
gotta
what's
talk to
interesting
them.
is the 30-year fixed mortgage. That's an American thing.
Yeah.
So everyone says like, oh, Fannie and Freddie, and it's government, and we could talk about why they're government because they were not a government entity or a
start?
conservatorship until 2009.
Oh
Yeah,
wow.
after the
after the
crash.
crash.
Yeah. So they were under the government's protection, right? And that's also why like the mortgage market hasn't expanded as much because pretty much 90% of loans, these underwriting guidelines are determined by Fannie Mae and Freddie Mac. So when they're the ones controlling all
And
the
that's
loans,
across the board. Like that
Everybody.
screen process, it doesn't change, doesn't vary for.
So Fannie Mae and Freddie Mac are pretty strict on their guidelines. This is what we require. What happens is, that certain banks and certain lenders, that's called an overlay, they'll have their own requirement on top of it. So simple, right? You have to live in a house 6 months to buy a home, right? Fannie Mae says. Well, the lender will say, well, that's great that you say it, but I'm assuming some of this risk. You have to live in a home for 12 months. It's called an overlay. Whatever. Simple thing. So because if the lender doesn't adhere to those guidelines that Fannie states, it could be a month, a year, whatever, and there was some deficiency in that, Fannie Mae can make me as the lender
Drop it.
buy that loan back.
Yeah.
And yeah, you're a big bank like Wells, Chase, like they have that a lot
They
of
have to buy
yeah.
it back.
but
yeah.
the three of us own a mortgage company, and we're not expecting to like get a call from Fannie and say, that $1 million loan you bought, it's not our responsibility anymore. You have to buy it back.
That just reminded me of.
That's nothing for you though.
You ever see Semi-Pro?
Nah.
The Will Ferrell, you ever see that movie? And he's a player that also runs the team, and the guy hits the half court shot for like $60,000, and they don't have the $60,000.
Yeah,
And he
that's-
goes, the foot's on the line, it didn't count.
Yeah. Well, dude, that's exactly. It's almost identical.
That's something you would say.
Oh,
yeah,
listen.
we can't buy
No,
that
but that's
back.
the same concept.
The same concept.
Yeah.
Yeah. So when they went into conservatorship in 2009 or whatever it was, they still haven't got out yet. All this time later, like 15 years later. And so the government and private entity are pretty much partnered 50-50 in the housing market right now. Housing finance.
But you were saying before they're going to go maybe to a 40-year loan, 50-year loan. You just don't know. Look at car loans, right? Before it was
What are they
always
at right
3
now?
year. No. Before they only gave you a
2-year.
3-year
Yeah, 2-year, 3-year.
car loan.
Yeah.
Then it went to 4-year. Then it went to 5-year.
Yeah.
Then it went to 72 months, 75 months. You can get a car loan now for
12 years.
84 months or
Yeah.
whatever. How many is 84 months?
7 years.
Okay.
So what's the car
so
rate right now? The interest
Like
rate?
6.5.
Is it 6.5?
No, even more.
I thought it was more, yeah.
Yeah.
Depending on the lender.
Yeah.
You can,
Yeah.
Some banks will do a little. You can, or 8%.
Yeah, so some of the car companies now are coming back out where cars are sitting again, so they're coming out 2.99, 3.99.
You get a
You
Tesla
have
for 199.
Oh, you can get a lot of electric cars for like
Yeah.
0.99 or whatever.
You got to get
but-
creative with the financing side. in a
It's
market
hard
like
to
this.
though.
It's hard.
But that's the thing. See, exactly what you said. Let's get creative. Okay, fine, but how?
How?
Because the rules are made by two entities that
Yeah.
are in a government conservatorship. So how do
Fannie
you
and
get
Freddie
creative?
again. I
Well,
like
Fannie and
those
Freddie.
things. Fannie and Freddie.
Damn Freddie, man.
They're-
So there
Actually,
are.
your Halloween costume should be
Should be
that.
Fannie
We'll
and
do a
Freddie.
thing of Fannie and Freddie.
Fannie and Freddie.
So there are non-Fannie and Freddie products. They're called non-QM loans, right? So
And that's backed by who or who's buying?
private investors. So instead of it being
Like Vito.
Yeah, exactly. So like those are the loans where you could get like banks, like if you're self-employed, we just look at your bank statements or cash flow, almost similar to like a commercial loan, right?
Yeah.
Like it's the same thing.
And now that you mentioned the non-QM loans, I had somebody the other day that's got a buyer with with one of those loans, and it was 12% the interest rate.
Wow.
Then the rates went down a little bit. They were going to give them 10%.
Was
But
it hard
again-
money or non-QM?
No, non-QM.
Because non-QM rates, vary, but usually between like 7.5 and 9.
Yeah, this one she was saying was about 10% because they wouldn't go up in price because the rate was so high.
Chris, you like the way I always give a range on these numbers?
You have to.
Yeah.
You have to.
What's well, by the way, what's the rate today, Dave?
It depends. Like between 6.5 and give or take in that ballpark.
In that ballpark.
So what's going on? What's our predictions here? Election year, things are crazy, as everyone can see on TV.
It's, so I think you know, I think we'll see rates. I do think we'll see rates drop, not as much as everyone thinks this year.
Yeah,
I mean,
I said the same thing in the last podcast with Mike.
Yeah, but next year, I mean,
Yeah,
it's hard to say.
Yeah, if we knew, we just don't know. It'd be great to know, and then you can wait it out.
I just think you have to you know, if you're looking to refinance, I think you have to trust your mortgage rep, and hopefully you can.
Sure.
And
Look at that. Trust your mortgage rep.
and if he tells you that rates are low, like you only have a short window, he's not trying to be a car salesman. He's basically telling you like
Telling you the
it
truth.
could be gone tomorrow, and that's what happened.
What's the matter with car salesmen?
I don't know. I said that.
That's messed up.
That's
I know a
messed
lot of
up.
car
I know a
salesmen.
lot of car
Yeah.
salesmen.
They're really
too.
good people too.
Yeah.
Yeah, a friend of mine, Freddie's a car salesman, and
I
another
didn't mean
person
any.
I
I didn't
know.
mean like that. You know, I'm a mortgage banker. I got enough slack, so like, you know, I can poo poo on someone else.
But you're right. You got to trust your mortgage guy. You got to trust your realtor. You got to trust your attorney and all that too. And no, I'm glad Dave's talking about all this. I'm learning a lot from it. There was things I knew, things I didn't know.
Sure.
But hopefully people out there, picked up a lot on there.
Yep.
But
This is why you should tune in, because where else are you getting this information in a localized market in Essex County, North Jersey?
Right.
To hear about this, because I would say out of, let's say there's 100 buyers out there looking for property, 80% they have no idea what you just said.
Definitely.
And they're not getting educated on it too with their
Right,
professionals.
and I get a lot of phone calls all the time, or when I'm with a buyer, hey, and they have mortgage questions. Yeah, a lot of it I know, but a lot of it that I don't know, I always say, here, you got to call a professional on that.
Yeah.
That I can't help you with. But things are changing all around. Look at what's happening now with the real estate.
Yeah.
With the realtors.
Yeah, like how's that affecting you? Like like how does that and the average person who's not buying a house right now doesn't really understand it, right? Mm-hmm. But but like how is that affecting your business? Like who does it help? Who could it potentially hurt?
I think it could potentially hurt a lot of people, that are representing buyers that really don't know what's going on with the market, don't know the local market.
Yep.
I think it's going to affect a lot of part-time realtors.
Part-time for sure. But when it comes to buyers, though, and we said this, I think, on another podcast, buyers now are so educated with the internet, where it's like cars. Like I could walk on, I'm a car guy, I could walk on any lot, and I know the cars inside and out. It's kind of like that with now.
Right. With real estate too. But now think about this, okay? A lot of people now, they always go on Zillow, right? Realtor.com, Zillow. I get calls all the time, hey, advertise on Zillow or advertise on Realtor.com. I got this zip code for you. My face is going to come up in front of everybody, and when somebody clicks on that listing, it's going to go right to me or to the next person and so on and so on.
They think they're contacting the listing agent.
They think they're contacting the listing agent. We talked about this prior too, where they think they're contacting the listing agent, they're not. But now, with the things the way they're changing, now they click on, say, Vito, not Vito Contus, say they click on somebody else that's my listing. They think they're clicking on me, but they click on somebody else.
Right.
Now, they want to go look at that house. Now, things have changed so much where you have to have what's called a buyer's agreement. Okay? Signed in force. So
who's signing that though?
the buyer has to
With
sign.
who?
With the realtor.
Okay.
So now you're going to have one realtor. It's not anymore where, hey, I can go with this realtor, I can call this realtor for that house, I can call that realtor for that house, and so on and so on. You can do that because on the buyer's agreement, you're going to have to put specifically for this house or specifically for that house. But if you're in the market, you want to trust one realtor to help you out. So now you picked up the Zillow realtor, right? You click on it. They're going to go meet you at the house.
But here's the thing, though. If you have an agent, why are you clicking on Zillow?
because that's what everybody did all
Yeah,
the
you just
time.
you're like, I'm not gonna wait for the agent. I just
For
wanna
the
look.
agent,
Yeah.
you know, I get so many calls. Oh, my agent told me to call you. Can you show me this house because they're on vacation? No, I can't show you the house. I represent the seller.
Yeah.
You know, have somebody in the office show. But
Okay.
now, getting back to that, to before that, I don't want to cut you off. But now, all of a sudden, you know, you're going to go show that house because you got the click from Zillow. Before you can let that customer in that house, they got to sign a buyer's agreement
Just for that house.
for that house or any house or any if they're going to be your
Wait, say that
you're
again.
going to be so they got to before you can actually
I'm a buyer. You're the realtor. I
Okay.
sign with you.
No. So he's
No,
saying,
no,
let's
no.
say he's doing an open house, and
no,
you,
open house is different. We'll get
Oh,
to that.
sorry.
But say you click on a Zillow ad,
Yeah.
you get me, and you want to go look at this house. Before I can let you in that house,
you gotta sign,
You
yeah.
got to
Yeah.
sign a buyer's agreement saying you're working specifically with me.
Yep.
You're paying me a commission if the seller's not paying a commission. So now if I tell you here, Chris, sign this. You got to sign this here for 3% or 2.5%, whatever it is, before I can even bring you in the house. You never met me before.
Yeah, it's crazy.
What are you going to do?
well, yeah, but if it's the law, there's nothing he can do. About
Right,
it.
but
here's
he's going to
my
be
brain.
like, wait a minute, I got to pay you 2.5%. What's going in your mind, or 3%? Before I even go in that house, I'm signing that I'm paying you a commission already.
Yeah, yeah. It's interesting.
It's so here's the thing, like, so the only problem I see with this whole thing, right, is the tracking part of it, right? So let's say I'm shopping for a home, okay, and I hire you, right? I want to go look at some homes, okay, and I'm looking in I don't know Wayne, and I signed this agreement with you for let's say
6
3
months.
months.
Yeah,
I
usually
say I'm
it's
not
6
tying
months.
to 6 months. Let's say 3, right? What
Okay.
do you do there? First off, you have to do 6.
We try for 6 months. Right?
Okay, so I do 6 months, right? You sign this agreement. Where does that agreement go? In your office? Mm-hmm. Okay, so now I go and you show me like 10 houses, and I don't find anything with you. I happen to be 15 miles away, okay, in another area that you're not even on that MLS, right? I walk in, I find a house, with a realtor, I like it, I buy it with that person. Okay? How are you going to know?
Eventually, you're going to find out
How?
when you're not calling back anymore.
Yeah.
You find out, hey, Dave just bought a house with this other agent, and he closed on so and so. He did the contract on this date. He was locked into me for another couple months. Guess what? I'm getting a commission from there.
You have a lot of stalkers now.
Oh yeah,
Dude, it's never going to happen.
But
It's
but
never-
again, hey,
How are you going to track that?
It's gonna be hard to track.
It's going to be hard to track, but it's trackable. You know?
I think it's going to be. Are you going to spend your whole day tracking down buyer
He
agreements?
called Essex County for a 3-cent charge on a parking meter.
Well, that's true. Vito's different, but
Let me tell you, but think about it, right? Think about it. That there was going to be a class action lawsuit on that, but
no, 13 cents. not three.
it was 13 cents, just like the NAR did the class action lawsuit.
my
That's
God.
why we're in this bind right now. But the buyers have to get educated. Okay.
Yeah.
Buyers got to come back and say, okay, I'm not just going to pick Joe Schmo and go look at houses. I want a realtor that's, dedicated to selling real estate. I don't need a part-time realtor. I want somebody that knows the area, somebody that's going to be on my side, to go and show me houses that know the business. For instance, here, you're going to go look for a house, right? You're just going to pick a realtor out of the phone book? No, you're going to pick it on recommendation.
I was just about to say this though, and this is just how I think.
Mm-hmm.
And just hear me out on this. This is why doing content like this and people getting to know who you are makes them feel more comfortable hiring an agent like you rather than someone who they don't know.
Yep.
Thank you. But here, I'll give you a perfect example, right? Dave, Chris, okay? Within the last week and a half, I closed on 3 deals, okay?
Big
Big star.
Big star.
Big star. The other one was supposed to be today, but it's got delayed. But
I'm not the mortgage rep on that one,
mortgages. You were the mortgage rep, but had nothing to do with that. But think about this, right? Why do you hire a realtor? And it's not to pat myself on the back.
Fiduciary responsibilities.
Right. And he's going to look out for you, right? If you're on the selling side or you're on the buying side. All right, so I closed the deal for the seller, a condo in Belleville. All right, we were asking $250,000 for the condo. I marketed the condo purposely. Let's put it at that price. Let's see where we can make it, go to and all that.
Sure.
Had multiple offers. Ended up selling the condo for $305,000.
Whoa.
$55,000 more. The seller,
It's a great
ecstatic.
tactic.
The seller was ecstatic. I never thought I would get that much. I was happy with $250,000. Thank you so much. 55 grand over, right? I have another seller in Wayne. We put the house up for $599. Okay.
And they want a 650.
We end up selling. They wanted to put it higher. I said, this is where I think we should be at. Same thing. We got multiple offers. I negotiated the price, $675.
Holy
So
Wow.
$75,000 over the asking, right?
I mean, you're a master negotiator. I mean,
And again, but there you go. Negotiator. Who do you need in today's market, especially if you're representing the buyer?
Yep.
Is a buyer's agent that's going to look out on your behalf. And again, if you're representing a seller, you're going to look for the seller.
And that's why people will weed out of this business. eventually,
Absolutely.
yeah.
Now here, I had a buyer. Okay, the listing price was $769. So right away, everybody's thinking $769. The house is going to sell for over $800. Not when you have Vito on your side. I represented the buyer in this situation.
What's that from on your side?
7 on your side.
7 on your side. Now you got Vito on your side. You know what I sold that house for?
740.
$728.
Wow.
$41,000 under the asking price.
See that?
But besides that, when it came to home inspection issues and everything else, we ended up negotiating. And guess what? I got another $7,000 back on top of that.
And that's why you work with Vito.
So that's what I'm saying, though. With doing content like this, like for agents that have a platform, why not put like a DocuSign link with your buyer's agreement? Because you don't have to work with somebody, right? If they sign a buyer's agreement?
If they sign a buyer's agreement,
You have to work with them.
you're representing them. Yep.
Yeah.
Interesting. I got to think about that.
But now I'm sure with the
But
buyer's
you know what I
agreement.
mean, though?
Yes. So I think
Submit like your pre-approval, and if I want to work with Vito here, and they don't have to even meet yet, and then they could do like a buyer's consultation.
you could do like going to like the open houses. You could do a contract for
Just for that house.
house. So when people go so let's say this is the crazy part is like let's say you walk into an open house and you don't have a realtor that you're working with and Vito's there. In order for him to show you the house, you have to sign that buyer's agreement. It could just be for that house for that particular day.
Yeah, I think they're going to change that, though. You might still be able to show them the house without signing the buyer's agreement
hope so,
just for
man.
that particular house.
Let me ask this, though. Vito has a team, and the buyer's agreement signed with you. Can you have a team member? do
Right,
the same
because,
thing?
you're going to put on there, Vito's team or whatever.
Yeah, is that you, V?
Robert Graham?
What are you nervous?
My leather Robert Graham shoes.
Take it easy over there.
Yeah.
I have one for you, right? How about this? How about I'm married, right? Dave and Mariella, right? And I go into that house and I just sign the agreement, but then I send Mariella to that house and sign the agreement. Then I send my son to that.
Crazy, yeah. No,
But think about it.
does. You could definitely do that.
I mean, are you
Right,
gonna?
but-
What are you gonna sit there with a driver's license machine and start scanning in the open house? You're trying to sell a house to make sure nobody's stealing anything in this house.
That's what they do in Vegas. They
Yeah.
do the
scan.
scanning of
But
the
think about it,
driver's
though.
license.
Now,
How do you know that?
Oh, I heard.
Now, how are you going to, like, when somebody walks into the open house, right? Are you going to look at their ID?
You know what? That's a good point.
Because I'll
Dave.
just sign Mickey Mouse.
Yeah, no, that's a good point where you're going to say, hey,
Blockchain.
yeah, I just decided
Blockchain
to.
technology.
That's
It's
right.
Beautiful.
Yeah.
Give it 5 more years. Everything we're talking about, this
Will be yeah,
will be no longer.
yeah, I agree.
Now, the other thing is with the buyer's agreement, right? And with this settlement and all that. If you're a seller, you're still going to give a commission out.
Of course.
Yeah, that's the way you're going to get most of the people to come into your house. The issue comes now is on the MLS, you don't have what the percentages that you're giving to the buyer's
You can't do
agent.
that anymore, right?
You can't do it anymore. So now you got to call every agent every time. Hey, what are you giving out? Are you giving out a commission on this? Are you not giving a commission
Yeah.
out on this?
And then what if? And they're going to say, "I'm not giving a commission." Who's going to show the house?
Right, but that's why you still want to do the commission. Now, the other thing with the buyer's agreement too is if you put on the buyer's agreement 2%, right, where you have to give me as a buyer
It's at
2%,
closing, right?
2% at closing, where they're going to work it and as a seller's concession, we'll figure it out to get that 2% back. But now all of a sudden, the seller is given 2.5%. Okay? Guess what? You're only allowed to take the 2%. The other 0.5% is going to go to the buyer as a credit.
This is gonna be crazy.
But now you have, ramifications when you do your income taxes. Well, you just got half a percent. So how is that all going to work?
There's more changes to come.
Oh, absolutely.
sure.
Over
sure.
the next year and a half, you're going to see a lot of changes on this.
Yeah.
It'll probably be different than what you completely said.
Because now Zillow's got to reoperate or rechange everything because their CEO's out.
Yeah.
They're
And guys and girls out there, a lot of this thing we're saying, is, what we've learned so far,
Right.
things keep changing, it's not set in stone. There might be a couple mistakes Dave said or I said or
Yep.
whatever, that's a disclaimer on the bottom.
I like that.
Chris told me just to say that.
Well, I signed
Statutes
an
of
agreement that
limitations.
all lawsuits go through him.
go through
Yeah.
Chris, but
C&G is actually held in Panama. It's a shell company, and there's a whole
Yes.
other company that operates it.
but
And my name is fake.
Yes.
But there's so many different changes, so many different things out there. Why it's so important to pick a mortgage rep.
Yeah.
Why it's so important to pick a realtor that's going to
knows
be
what they're doing.
that knows what they're doing. That's been around a long time. That actually can tell you, hey, what did you do for your last buyer? Right? Somebody calls me and says, hey, I want to work with you, but what did you do for your last buyer? How did you negotiate the best price for that buyer? Or seller? How'd you negotiate the best price for that seller? You know what? Interview your realtor.
Yeah.
Don't just go there and say, hey, Joe Schmo told me to use this guy. I'm going to use him because, whatever.
Watch Vino with Vino.
Watch the show.
Watch
I
the
mean,
show,
listen,
yeah.
you want to know what you're really about. This is it.
This
This
is
is the
it.
best interview you could do.
Yeah, I'm on your side. I'm there to get you.
That might be copyrighted.
No,
Yeah.
all right. I'm not on
Seven
your
on your side.
No, I'm not 7 on your side. But no, if you really look at it, again, I try to help everybody as
Sure.
much as I can, like their family, whatever.
Tell them why, V. The shirt.
It's a shirt.
No. Remember, you used to do it for the money.
I used to
and
do it
then
for the money. Now I do it to help people.
to help people after he had his heart attack. he
No
used to
heart
say-
attack, just
Yeah.
open heart.
Open heart.
Open heart surgery.
But but really, think about it. If I've had some people say, "Hey, just I'll give them that price," and if I know there's more room to save that buyer, I'll say, you know what, hold on. There's no multiple offers in this situation. Maybe we can squeeze another couple thousand, 3, 4, 5, 10,000.
And Vito will squeeze.
Oh, dude, I'm telling you, it's unbelievable.
But again, at the end of the day, if I'm representing a buyer and I can squeeze another 5, 10 grand, you know what? I just help the buyer out for another 5, 10 grand.
Yeah.
If I'm on the seller side and I know I can get another 5 or 10 grand, I just got.
And that's your job.
That's my job. That's why you
that's
hire
it.
me, and
Yeah.
that's why I'm good at it.
And that's what separates you from everyone else, V.
But also, too, going back to all like what we're talking about, this industry was due a change, too.
Yeah.
It's been a long time coming. You think so?
I don't know.
With technology now? I mean, you go on these MLSs and you see their websites. Their websites is from 2003.
No, I agree, but like I feel that I don't necessarily know if it was due for a change because I don't think the system was broken. I think it was working. It's hard to argue that that a system's broken when sellers are getting the most money they've ever had, right? So like, and then a couple years ago, buyers were getting great deals too, right? Like, so that's an ebbs and flow.
Yeah.
So I think if you would have, I think that if you would have kept it the way it was, and maybe change the MLS's.
I was just about to say that.
Yeah, I think like if you would have changed their role in it, I think that's what needed to change. Like,
The MLSs are awful.
oh, it's like I don't with technology. Why do you even have it? Like, I understand why it's there now, but like 20 years ago, 30 years ago, they would have the big phone book, right? Like, and look through the books. Like,
Yeah.
I mean, you could for free. You get a listing. You create your own website. Like,
Exactly.
you know what I mean? Like, you could put it
Exactly.
on Realtor.com. Like, you know what I mean? Just put the listing there. Why do you need the MLS? Like, and that is what drove this whole
crazy.
lawsuit, though, right? Like, was the
Right,
the
because
disclosure of the fee.
It's crazy.
It doesn't make sense.
It really, because there's how many MLSs in New Jersey? You have Ocean. You
Yeah,
have
we were
Hudson,
talking
you have
about that
Essex,
with
you
Mike.
have
Monmouth.
Yeah, Monmouth, NJMLS.
There
Liberty.
should just be one.
Yeah.
Make
That's
it
all you
one. It's
need.
New Jersey. Your license, my license, your license.
it one
is
for the whole
State
country.
of New Jersey.
Why not have
That
one for the
too.
whole country?
Yeah,
Yeah.
where your super key can, but the problem comes into play if you make one for the whole country and your super key works for everybody. I go to Arizona, hey, this house is vacant now. I can go in.
No,
and
you
use
could.
my key,
Technology
you know?
could read.
Maybe-
like,
maybe they
I
can
mean,
do
like,
that.
yeah.
Location and stuff.
Listen, you could go. I could work for same company and go into a different office across the country. I can't get on their Wi-Fi. Like, there's safety
Yeah.
in there. I mean.
Yeah, new technology. The technology
Yeah.
today is crazy.
Technology was the answer to this, and listen, the market. This is why I have a problem with this lawsuit too. Is they were trying to limit like excessive commissions, right?
But the commission in New Jersey's always been negotiable. It's not.
No, but what I'm
excessive,
saying is
but-
market takes care of itself. I remember it used to be like what 7%, then 6%, 6% forever. Now what
like
is the
4.
average listing? 4.5%,
5%, 4.5%.
4.5%. But because the market took care of itself, I don't think you needed this.
But think about it. You had realtors out there, right? And when it was on the MLS, and you were giving out 2%, right? I had realtors call me. Hey, you're only giving out 2%. I won't show a house for less than 2.5%.
Those are just bad realtors.
Right. So what are you going to do now where it's not even on the MLS and they call you? What are you giving now? You got to call me and say, what are you giving out?
Yeah.
I was looking at a listing.
It seems so artificial. Mm-hmm. Like I have a fiduciary responsibility to the buyers, and my first question is how much you paying.
Yeah.
It's weird.
I called a realtor yesterday, and the son just got into the business 6 years ago, and he told me what he was giving. The father was in the business for over 40 years. And we hang up. We had a good conversation with the kid, and all of a sudden the dad calls me. You believe this, effing shit? What they're doing? Been doing this for all these years, and now we got to call people. We got to ask them.
Crazy.
It's
Who's the realtor,
insane. I can't tell you.
But it really is crazy that you're starting the conversation off of how much is being put in my pocket.
Wild, right?
It's weird.
Right.
That's what happens with these lawsuits
and all
yeah.
that. But like here, now you have buyers out there looking for houses, right?
Yep.
And you're on the MLS, a new listing comes on. I send it right to the buyer. I don't say, oh, let me call this agent to see how much
Yeah.
they're giving before I even send it out to the buyer.
Your fiduciary
Responsibilities for the buyer anyway.
Right.
Plus, it's 5:36 in the morning. The other agent ain't going to answer the phone. But
Just Vito will.
just Vito.
Walking.
That's it. But it's just crazy where the business is gone,
Yeah.
and it's
It is what
insane.
but the only constant in life is change.
Change,
And you know
yeah.
what? It'll be all right.
That's what I'm saying. You're going to see more changes.
Yeah, you know what? Listen, you
Hey,
adapt. That's business.
That's business, and you're going to see a lot of people getting out of the business, which you needed right now. Too many.
When the market's good, more licenses. When the market's bad, they go down. And
Yeah.
How many agents now in the state? 80, 90,000, 100,000?
V, do you know? I don't even know.
No.
So many. It's hard to even gauge because so many are part time and
Yeah, not
just
even
have a
doing it.
license. So
Yeah.
All right.
This was good.
Yeah. Nice work, V. You were a wealth of knowledge.
Wealth
Was
of
I?
knowledge.
Yeah. I
You
mean,
want, Dave, you were good too.
Do you want to
School-
talk about
school-
home inspectors now that pissed me off this week? Or no, we'll get to
Wait, is
that
this your
next
brother?
week.
Proactive?
no. He's signature.
Oh, signature. Okay.
Wow, we're mentioning names now.
Oh, boy.
boy.
I don't like it.
Oh boy. But no, this was actually good. At least I like this one too because again, we sat down, we talked about mortgages, we talked
Yeah.
about
It's
you
good
know, real
information.
estate
People should listen. If
Right.
you're in the market, you should know about this stuff. You know.
and you know, you should know the people out there that, you know, are going to help you out and, you know, do the best for, you know, for you. So
Yeah.
100%.
on that note, my wine is done. One day, and that day will come when you need to buy or sell a house. And when that day does come, you need to call Vito Cantuzzi, the godfather of Northern New Jersey real estate.